everybody. Thanks for joining me. My name is Jeff Green, president of Green Team Realty. This is the September 2020 housing market update. Let's jump right in, check out the market stats, and then we'll get to our panel and take it from there. So, man, things just keep going. Things are just moving along. Really, it's an up and away situation. Listen to these stats from the National Association of Realtors, which is realtor.org's website. July's national price increase marks 10 straight months of year-over-year gains. Remarkable to think that we plowed right through the pandemic situation with prices just continuing to increase. And this is remarkable. It's the first time ever that the national median home price, not average, the median home price has breached the 300,000 level. So that's a big deal. That's never gone beyond that number. So here's a look at showing times information on traffic. You can see that, during the shutdown months, traffic just fell off, and now it's way up. And actually, this is on a year-over-year basis. This basically is showing increases versus last year. So you can see that we started out the year going very well, but look at where we ended up. I mean, my gosh. Traffic really just popped after people were able to get out after the lockdowns occurred. Purchase applications in terms of mortgages. This is again another look at year-over-year differences, right? So they were up in January going through February, and you can see to March, and then everything just kind of fell, but then it popped again. So again, if you think about how good of a year 2019 was, this is again increases over 2019 and 2020. This is an interesting chart here because what it shows is pended deals, right? Basically under contract deals. This is these are numbers from Zillow, which take it with a bit of a grain of salt because Zillow is not tied directly to the MLS systems. However, they do have a way of knowing the status changes because they do not display property data on their site, on their portal. That is under contract. So, but they get that ping when it happens. So the long and the short is the week over week differences, according to last year, were way up going through March. Lockdowns happened way down. Then we experienced this major pop over the summertime. Everybody heard about it, right? Realtors were like pulling their hair out because there weren't enough homes to sell. And now there were 5 times the amount of buyers. But look at what's happened. It's kind of leveled off, and things seem to be slowing down after that initial pop from, the pandemic. Probably, again, pent up demand, right, from the decrease. But also, I think a lot of people just bailed on their situations that they were in and just wanted more space. So they're moving out into the suburbs and up to the country. And this is really an experience that many are having around the country. So couple this with the fact that Realtor.com's chief economist, Danielle Hale, says that inventory is down 38% year over year. So demand is way up and supply is way down. So that brings us to, well, where do you get more supply from? Well, you build more homes, right? So that's interesting to know what's going on with the builders. So this index here gauges builder perceptions of the market via a monthly survey that they've been conducting for 35 years. And in the past month, in August, it rose 6 points to a reading of 78. That ties its highest reading in history, initially set in December of 1998. Now, that is a reading of the confidence of builders themselves. So builders are extremely bullish on this marketplace. However, one thing that should be noted is that lumber prices have gone through the roof. They've more than doubled since mid-April. Now, in theory, the pricing of lumber should come back down because supply chains should be able to kick back in. It was more of an issue. It was more of a supply chain issue than a supply and demand issue as far as lumber prices go. So we should see some relief on that front, which is good for everybody, right? It's good for the builders. It's good for the consumers because at the end of the day, the high lumber prices just get passed on to the home buyers. So it'll be good for those prices to come down. Now, here are projections on future home prices, okay? These are just different. You see the chart heading down, but that's just because of the way that they're aligned here. These are just different sources. So Fannie Mae is projecting for the current year 2020 a 4.5% increase current year. NAR, National Association of Realtors, 4.3. So you can kind of get a feel for where these different organizations are projecting. CoreLogic is projecting 0.6 of an increase, but check this out. This is where Fannie Mae, Zillow, and CoreLogic were a few months ago when the pandemic basically hit. They immediately came out and downgraded their numbers. And so that the blue, the red, right? That's where they were, and the green is where they are now. So this is almost a 7. Let's call it a 6% percentage increase in CoreLogic's projection of where prices will be when 2020 finishes. Zillow came way up, Fannie Mae came way up. Sorry. So, and then this is very telling, and this is a very important slide, and very important for everybody to understand, is that yes, pricing has increased. Prices are on the way up. They are going to continue to go up until the inventory problem is solved. Prices are just going to continue to rise. But it's about affordability. Okay, it's not just about pricing, because now 30-year fixed mortgage rates continue to hit new lows. It's amazing how every week I'm seeing news about it just went lower, it came back up, it came back down. So mortgage rates have just been fantastic, which is making the affordability of housing good. And you can see that this goes all the way back to 1990, and it shows the level of affordability. So this 164 number where we currently are is historically very high. If you look at this orange number here, that is part of the financial crisis, right? Those are years 2009 through 2015, when really the best deals were to be had, right? If you're purely looking at price. But when you mix it together with financing options and hence affordability, we're still at a very good number, and that's good news for everybody, really. So here's a look at raw numbers and a graphic layout here that we show you each month. These are national numbers. So this is existing home sales. Look at how they shot right back up, right? What a comeback that was. Again, pause, pandemic situation, uncertainty. People started moving around, boom, market popped. Home sale price never really came down. You know, it came down a little bit during the pause, but look, came right back up. And look at this variance now. Looks like it's set to take off. I mean, if it follows this trend, you know, anywhere near, that's a pretty big rise. And again, this is average home price. That new record was set or above the 300,000. That was median. Months supply of inventory, you know, not good here. This again is the inventory numbers, right? So really what you have, what I've been saying to a lot of people is a lot of people have been like, oh, Jeff, you know, the real estate market's great. You guys must be crushing it, making a ton of money. Well, it's not really it, right? The idea is that there's not, and again, coming back to it, the average number of homes that are being sold are about the same, right? It's just that there's like 5 times the number of buyers for the same home. So really all that it's doing is driving price for the sellers. It's not necessarily creating more transactions for the realtors. So don't expect us to start driving Ferraris anytime soon, for all of you who may think our commissions are too high. So let's take a local look. Orange County units sold, same story, right? We dropped down, but what a comeback. Things shot right back up, and looks like we're, you know, back to where we needed to be. 2019 was the red line for those who are wondering. 2017 is that blue line. You see that peak, it almost matched 2017's high. Average sale price never really came down here. You know, in Orange County, just kind of stayed steady. Inventory's tight, always has been for the last few years here. Sussex County units sold, same story, right? We're kind of, you know, moving along. I guess you could say there was a little bit of a dip versus last year, but boom, Sussex just absolutely took off. So that's good news. And average price is holding and still continuing to rise. What a variance here, right? Sussex seems to finally have popped. I mean, you could see for the last few years, you know, for those of you who follow us here on the Housing Market Update, it's been kind of a mixed bag for Sussex as far as pricing goes. It's been tight. There's been bidding wars. There's not been inventory, but you hadn't really seen the prices take off. But look at this variance, all this white space in between those other lines. That's an increase. That's a big increase. So good for those in Sussex County. All right, so some housekeeping items, and then we're going to get to the panel. So Tuesday, October 20th at 2 p.m., that's our next housing market update. You can always stay connected to us by going to our website, greenteamrealty.com/HMU. And thanks to our sponsors, Really the Business Referral Exchange, you can sign up at Really HQ. If you want to exchange referrals with me, all my agents know you got to be on Really, because that's how I exchange my referrals. All right, so let's get right into it. Let's just go ahead and introduce the panel real quick. I'm looking in my gallery view. I see Carol Buchanan first. Carol, wave your hand. She's from Green Team New York Realty. Michael Gianetto from Cross Country Mortgage. Mike, give us a wave. Christy Anderson from Green Team New Jersey Realty, and Karen Gonen from Green Team New Jersey Realty. All right, so Carol, I want to start out with you, and I'm curious to know almost from a nostalgic standpoint, right? I grew up in this industry as a little kid, kind of running around a real estate office because my parents have been brokers forever. And so I can remember hauling the MLS books into the office and out of the office and putting a nickel in the meter, and now it's 25 cents, right? And all these things. So what are your sentiments on this new record that was made over nationally? 300,000 is the median price. I mean, you can probably remember days where it was below 100 or 100, back then.
Oh yeah, back then, sure. I mean, it has just absolutely exploded. I can't believe how prices are going up quickly. It's just, and it's harder to find some homes for first-time buyers because prices have gone up. But it is quite interesting, the changes that we have gone through. Absolutely.
Yeah, and it's when I look back on it, I can remember. So, I was a young professional starting out the Green Team, 15 years ago, and basically started at a peak, right? Financial crisis hit and made it through that trough, and then have been riding the wave back up. And I remember having conversations with people that had been around a long time during the doldrums of the market saying, is this thing ever going to come back? What's going to happen? And a lot of people really didn't want to give me advice one way or the other. Like, Jeff, this is such a bad time. I don't know what's going to happen. I've never really seen it this bad. And that kind of ended in 2016. So it's been this 4-year run, where it's just really been sustained and it's been going on. Yeah. So it almost buttresses the old statement that, the deeper the down, the higher the up for any sort of economic cycle. That's always what you hear. And we're living it. It just keeps going and going and going.
Yeah, absolutely. Absolutely. Yeah. It's just bustling out there.
Yeah. And so Karen, I wanted to just ask you this question to kind of transition a little bit here through everybody on the panel. We'll get to hear from everybody. So the newly pended deals have tapered off. We saw the chart there. We were just talking about it, which means that it seems like this intense period that we had over the summer is maybe slowing a little bit. True or not true in your marketplace? What are you sensing?
It's not true at all. We're low on inventory still. We still have the stream of buyers that are coming across may have slowed down a bit, but we still have 30 buyers for every single new listing. And people are just getting out of control, where if you don't have cash, then it may not even be worth it to put in an offer, because we're dealing with, I think the statistics are 300 people a day are leaving the city. And they have cash. So our houses that are between the $2,000 and $3,000 and $4,000 is not something they have an issue purchasing cash.
Mm-hmm.
So that's what we're competing with.
Christy, are you experiencing the same thing?
Sorry, just unmuting. Not exactly. I haven't had only buyers from New York City. I've had a lot of first-time home buyers, but unfortunately, they are competing with some of the New York buyers that have cash. But there are still first-time buyers out there that are, have to get a mortgage.
And are any of you finding that those first-time buyers are able to have some success and get homes?
Some,
Shaking her head, yes.
I
some.
think one of the really good things is dealing with green team agents. We're all at the top of our game. We all know how to write up really strong offers. So if you have a buyer that has to get a mortgage, at least you can get them to put more money down or a closer closing date, or put them together with a mortgage lender that knows our area and can close the deals. So it's still possible. You just need to have a good agent in your corner.
Yeah, that's always been the case, and that always will be the case. Agents are worth their weight in gold, that's for sure. Good agents, that is. Yeah, so it still seems like it's very frenzied. I mean, I being, the broker owner of the agencies for Green Team, I'm talking with agents every day, and a lot of times what I hear are the problems that they're experiencing. So I have to try to find solutions for them. And it still seems like we're at a fever pitch. I do think maybe it is, turning down a little bit because, some of the listings that I keep my eye on, or I'm, counseling my agents on, they're not getting as many offers as they were. Certain things aren't selling as fast as they were 30, 60 days ago, but it's still a remarkable market, especially if you're a seller. I think that's the big message is, you never know how long these market runs will go. This has been a 4-year, very good run here. All signs are pointing to another at least good 12-month run. So if you don't want to sell now, I'm sure if you sell in the spring of 21, it'll be fine. It'll be a very good market. I doubt prices will decrease by that point in time. But there's no reason to wait any longer. If you want to move on with your life, it's a good time to do it. So it's really important that we get people to list their homes so that we can move the economy. Mike, unless Carol, Christy, or Karen, did you have anything else that you wanted to add to the discussion right now? Otherwise,
I actually had just one thing.
Yeah, go ahead.
I just wanted to mention that our inventory right now is at 3.1%, meaning inventory wise. We have 3 months worth of inventory, which is the lowest it's been in a very long time. We haven't gone this low in, I think they said, over 4 years. We need houses. And anyone that I know that has 2 homes and are selling them, this is the best time to sell. Because for every house that is listed, we have, I'm sure Carol and Christy can tell you how many buyers they have in the same exact price range. So when you get a text from your buyer that said, hey, I saw you sent me this house today, you're already showing it to 3 other buyers, because we're all getting the same type of request for a house. So if anyone's on the fence, this is definitely 100% the time to sell.
Okay. All right. So Mike, Mr. Affordability, right? You guys are the ones making it work because rates are so low. And I know that you don't control the rates, the bond markets do. But what, I just want to hear your general comments, kind of an update on where things are, but also your predictions on where rates are headed in the next 3 to 12 months.
All right. So there's a lot of information that I'm listening to and I'm hearing, and the rates, to start with the rates are phenomenal right now, right? Lowest on record. 30-year fixed rates are 2.625, 2.75%, 15 years or even lower, 2.375. It's allowing for more purchasing power, right, for these people. So they are where they weren't able to get a house before. Now they can get it because they can squeeze in there, regardless of the price being a little higher. Because the cost per thousand is so small. On a 30-year fix is like $4.08 per thousand. So it's so marginal, right? For every $10,000 is $41 a month. So we have all these dynamics that are going on where we have low inventory, we have huge demand, right? And it's causing these prices to go up, but it doesn't matter because these rates are so low, right? So we still have the purchasing power from these people. We know that the first-time home buyer segment, right now it's about 25% nationally. It's 25 to 34, ages 25 to 34 make up 25% of the market right now. Ages 35 plus is about 72%. So those are the move ups, right? Or these people that are moving out of the city that are buying right now. the way I like to structure, we're talking about the strong offers that Karen was mentioning, is that we have to make these pre-approvals as strong as possible, right? We have to make these buyers as strong as possible. Whether it's a first-time home buyer or not, it doesn't matter. Everybody's competing right now. So I think that that's really important that Karen brought that up, is making it that they put more money down on the contract signing, or that we make it a shorter closing, which is a little bit of a problem in itself right now due to the industry volume and how fast turn times are. So, but I think there's a lot of different dynamics that are going on. It's a great time to buy, right? Even if rates go up, it's still going to be a great time to buy. It doesn't matter what rates are, right? People will always buy. And the way that I'm looking at this for what's going to happen is we all need to look ahead to see where is the market going and where are we going to be to acclimate to what's coming, right? We can only ride this wave and hope that we can acclimate in the future.
Yeah, well, the question is, what is the wave going to be? But I mean, I think that it's ironic that the pandemic has actually given a boost to the real estate industry. It's ironic that happened. I mean, I don't think anybody would have called that necessarily, but it's just been this mass exodus from the cities, and I think that ultimately is going to be short-lived. I don't see, I think New York
it's also very different. Sorry to cut you off. It's very different than it was, right? After 9/11, there was an exodus and people were coming up, but it wasn't as widespread. Now you're having people come from Long Island and every borough that they're coming out of the city, and they're spreading out to Sussex County and Orange and Sullivan. And I mean, second home business right now is insane in Sullivan and Ulster.
Yeah.
Incredible what's going on up there.
Yeah. Yeah.
So I think that's why it's got some more legs too, is that more people are coming out of the city.
All those builders that have been investing up in Sullivan County and those north reaches for years and been hanging on. This is finally their payday, But I guess, it's just interesting because I guess one dynamic that didn't exist in the 9/11 exodus from New York City is that remote work is much more feasible in today's day and age, and I think the term is creative destruction, right? So like when something like this happens, businesses are forced to make changes, and then suddenly they realize, wow, this could actually be better than what it was, and I don't have all this overhead with the occupancy cost of my leases all over the place. So, but it's interesting because I talk to a lot of people that were traditionally working in an office day in and day out, and they really want to get back into their office. They're having a hard time working from home. It's not the same as what it was. So I don't know. I think that although it's a nice thought that all these people are going to be able to work from home, I think over time you're going to see this, movement back to the cities. I do. Because there's entertainment, there's recreational, things about cities that people love. And there's a reason why there was such a movement of population from rural areas to more urban areas over the last 30 to 50 years. I mean, that happened, So it'll be interesting to see. And I also think a lot of these people from the metropolitan areas around the country are buying out in the country. They are second residences. They're not necessarily selling in their urban locations, So that'll be interesting.
A lot of them are keeping them.
Say it again.
There's a lot of second home business going on. A lot of people coming out of Brooklyn, especially that I've been dealing with. It's amazing. I would say 1 out of 3 applications that I've gotten over the last 4 months.
Yeah.
Is people coming out of Brooklyn and buying a second home.
A second home. No, I understand. But a lot of those people, A, have never owned a second home before. B, may have never mowed a lawn, trimmed the hedges, done all these different things. And I can tell you from experience, because I've dealt with a lot of people that come out of the cities and come up to our area in the Hudson Valley, and they don't realize, they're like, wow, it's really further than I thought it was. I'm not so close to family anymore. I've got to maintain this property. It's a lot, So I think that everybody should, it's like anything else, right? Like when you have these big trends, things happen, you always have to be measured, right? Because all good things come to an end, So I don't think that all of these city dwellers coming out are necessarily going to stay in these rural areas and keep the overhead of the second home that, when things get back to it, they're going to be back in the city in the hustle and the bustle, and they won't want to come up anymore. You know, like for example, we've sold a few homes, second homes this year, of people that bought second homes many years ago, right? And this was their opportunity to get out because they bought in the last boom. And the prices have been down so far that this was their opportunity to get back in. And it was interesting to hear some of the stories about those people that, you know, yeah, we bought it and we loved the house, we enjoyed it while our kids were little. But then as they got older, they didn't want to leave on the weekends because all of their friends are where we live in the city, you know, so they didn't. So that's a whole nother dynamic there too. So it'll be interesting to see how things shake out. All right. So Mike, anything else that you want to update us on as far as the mortgage industry goes?
No, I mean, it's a great time for everyone. I think that as long as we stay focused, that everybody can do a lot of business this year and into next year. And again, you know, I hope to look forward to do business with all of you.
Likewise. All right. Sounds good. Ladies, do you have any final words, thoughts, comments, perceptions that you want to throw in there before we break?
Well, I would just reiterate what the panelists were saying, that it is a fabulous time for buyers because interest rates are so low. And for sellers, if you're thinking of selling, now is absolutely the time to do it.
Yeah, I think the trick is for a lot of sellers, where do I go?
Yeah, well, there is that. Yes, yes.
Yeah. So, but if you have a reasonable place to go and you have a good plan in place, now's a good time to execute it for sure. Okay. Thank you, everybody. Appreciate your time. We'll see you in October for the next housing market update. Take care.